It's been a long time coming, but I'm back with another Bitcoin update, so make sure you like, subscribe, comment and share before we dive into this weekly and daily chart suggesting all the supports that need to hold in order for bullish continuation for the second part of the bull market, which is always the part where alts explode the most. In the Discord, in my own experiences, in the first part we actually did multiple 10 and 20 X's, so if that's meant to be the part where alts are not really exploding, imagine what those coins will do in the upcoming part 2 of the bull market, where we expect alts to go up way more than ever. We have not seen many large caps move, and so that's why it's the second part of the bull market where we go vertical. That's where we anticipate huge moves for not only the large caps, where we expect 10, 20, 30 X's on the large caps, but in fact 100 X's, potentially maybe even 1,000 X's on micro caps, small caps. So very exciting times ahead. If you want to work with me hand in hand, check out the links down below for more information. Now, looking at the weekly time frame, all that's going on the past month or so, and I've already explained it in my past Bitcoin most recent update, which is we've come back to a level that we have not been at for 3 years. So essentially, we're going to stall off around that area. Every single time we've come up into this area in the past, we can see early 2021, the end of 2021, at least the first part of 2021, it was not a quick process over here of the rollover. It spent months on end around this area before a true reaction of downwards. Yes, we held all the key levels of support before having another go, but another failure resulted in the bear market, a double top. In this case, it's a lot different to last time because we're actually above it, holding it as support 3 years on from it being resistance. So once this 59k level holds, we need to see it continue to hold for our bottom to be above that point, which currently is around 59.5k. I think it is somewhere around 59, somewhere around there, 59.6k. And as long as this maintains the support, that 59.1k area, this wick, should actually continue to hold. We are looking for bullish breakouts as long as it is our support, right? If we lose 59.1k, it changes the story, and we'll look at our key moving averages and key Fibonacci's for those levels. But for the moment, while 59k is the support, we're still expecting further continuation higher, and we're going to dive into those bullish targets for you right now. So continue to stay tuned in this video because there's going to be so much vital information in here. Now, over on the daily time frame, we can see that we've been in somewhat of an accumulation for the past month or so, since the beginning of March. So what we need to see is, continue to hold that low. What we actually mentioned in the chat is that we pulled back into the golden pocket already. Now, this is an expected rejection point. So as we started to come down, and yes, yesterday we did actually hold the 55. At the moment, it seems as if, at the moment, it can change, but at the moment, we are currently below it. It's not the daily candle close yet, so there's nothing to worry about as of now. It's about the daily candle close, whether that is going to be below the 55 moving average. So if this daily candle close is beneath the 55, then we're looking for support levels. So that means that this pump up is completed. Remember, for bullish continuation to 75, 82, 88, and 96k, let's just round it up to 100k. We need to push through 69, 600, and 72, 600, as well as the 73, 700 high over here. But as we were coming up in recent days, in this past week, we're retracing back to this high where we saw the last dump. Yes, we need to break this and that level, but as we're coming up, we're coming back to this high as our closest. Along the way, we can see the golden pocket resistance. So as we are now coming down, I need to prepare you with some supports. So I'm just going to go off this low, our lowest point there, to the highest point after that low. And we're now spotting all the key levels of support, which I'll now zoom into: 63.4, 62.5, 62.25, 61.2k, and our low that we just bounced from is 59,600. So add this fib, or just take a picture of this, or remember these levels and mark it out. What you can do is actually just draw a box between these 0.5 and 786, and it's this whole area that needs to hold. We are specifically at the moment on the 0.5 So that's why for the daily candle close, if we could actually close above the 55 after getting a bounce from here, if we could close above the 55, we're looking to actually attempt a breakout through the 20 moving average. And that's where the other Fibonacci comes in, because we can see over here the 20 moving average, the mark where we just marked out, is in line with the 0.5. And remember, we actually need to break this level all the way up here, this level all the way up here, and this level all the way up here, 73.7k. So until that very moment, there's always going to be that risk of the rollover, with targets to the downside actually being prepared for you today. So let's look at them now. Thank you for staying tuned until this moment, but please don't forget to like, subscribe, comment and share. This is how we bump up the algorithm and grow the channel to 10k subscribers. So yes, we've looked at all the key supports that need to hold to break those key resistances. I've mentioned all the resistances, but remember guys, if we lose that 59.1k area, these become your targets: 57.7, 56.7 and 55.3k. I'm not looking at these targets as of now because there are no signs suggesting to me that I need to see proof pretty much that we have lost 59k, and we are above that point. So my belief is that I can always prepare for these targets, but I'm not going to wait on them and be like, oh, I'm only going to buy down there. It's not how it works, guys. You can have it prepared in mind. If we lose a certain level, we are going to those targets. That will serve as a great DCA point for your alts. However, you don't wait for that moment, because you're not meant to go down there. If we are holding this support, if we're holding this support, if we're holding these supports, we're not meant to go down there. Only with proof, only once lost. Only once the golden pocket's lost, the 1 fib level here is lost, and 59.1k is lost. Then we look at the first target, not even the last one, the first one, because you could get a bounce that reclaims all the key levels and we're bullish again. So that's why you can have them prepared and in the back of your mind, but it's not a guarantee ever that it will happen. We are in a bull market. So essentially over time, no matter what actually happens, it's all a bunch of nonsense in the short term, and eventually we go high. So this is all the short term nonsense that I was talking about in an expected boring location, because it's a location which, remember, on the weekly time frame, we have not been at for 3 years. So it just makes sense that it's going to be a point of consolidation for a while. That is it from me today. Like, subscribe, comment and share. If you want to jump in to work hand in hand with me, check the links down below. Head over to the website. We have multiple options, whether that's the Discord community for group help, as well as the live streams twice a week. You have access to all my cryptos, the portfolio split, all the percentages and why I own them. I'm there to answer your questions and help any queries that you have daily as a group. If you want one-on-one mentorship, there is an option there as well, where I teach you from completely zero knowledge. If you need to know how to work wallets, how to use dexes, from zero knowledge, I'm there to help you. I've been teaching for over 4 years now, with hundreds and hundreds of students already in the past. I've also got an ebook if you don't have the time to do the mentorship or to join the group. I do have an ebook as well with my exact trading strategy that is actually meant to be used in the bear market for guaranteed money. So yeah, check it out. All the links are down below. Also follow me over on Twitter and on YouTube as well. Cheers.